Hello everyone. It appears that financial crisis in Japan is entering a new phase. I bring attention to Japan often. The reason for that is that I think this is a preview of what is to come to financial markets worldwide. UK crisis is just one of many that most likely will follow. Let me know in the comments if you think that situation in Japan is a sign of system-wide crisis or just an isolated issue. I am curious to hear your opinion. As we all know, for some time now, Bank of Japan was doing unlimited QE, pledging to print as much currency as needed to defend yield of 10-year government bonds at 0.25%. Last week, Bank of Japan was forced to expand its yield curve control operations to other maturities. It conducted an emergency bond buying intervention across the board, but failed to contain the rise in yields, Reuters reported. Yield control basically means printing of a local currency and buying as many government bonds as necessary to prevent bond prices from sliding below certain level. Generally, lower price of a bond means higher interest rate. Governments are paying off bonds at a face value at expiration or maturity. Bigger discount from a face value, more profit for a bondholder or higher yields. It also means bigger expense for the issuer, or government in this case. Japanese investors, seeing expansion of yield control measures across entire curve, interpreted this as a risk to the entire bond market, and rushed for the dollar assets. And, coupled with news that US Fed can raise rates by another 75 points, US dollar shot to a new multi-year high, just over 151 yen per dollar. This put entire financial system of Japan in a very dangerous situation. Uncontrolled drop in currency value has many negative implications, and we will talk about it in a moment. Now Bank of Japan has to deal with both problems simultaneously. Support tumbling bond market, and prop the falling currency. Few days ago, Japan's bond market experienced a complete loss of liquidity. Here is an article from Wall Street Journal. Japan bond market sets record for no trades. For the fourth straight session, none of the latest issue of 10-year Japanese government bonds traded on Wednesday. According to Japan Bond Trading Company, it was the longest streak since March 1999, when comparable data became available. On the currency front, Bank of Japan, reacting to a new low of the yen against US dollar, promised an intervention. And it appears that BOJ just delivered on its promise. Friday, during morning trading, US dollar experienced a massive crash against yen, which most likely was caused by a major currency intervention. There is no official announcement yet, but Bank of Japan is the only player on the market that can orchestrate a currency suppression of this scale. Dollar just plummeted straight down all of a sudden. Let's talk about why plunging currency and rising yields are bad for the economy, and then we can take a look at some possible implications for the Japan, US, Europe and the future of global financial structure. I think we can make a compelling case for an upcoming reset in the world's financial system. Let's talk. So why weaker currency is a problem for Japan? Some countries, like China, kept country's currency weak, by aggressively intervening in financial markets for years. It was done to support exporters, and, as consequence, domestic economy. Japan is a different story. China's economy, despite all the troubles as of late, still growing at an impressive rate. Japanese economy is not. It has been stagnating for years and was playing money printing games for a while. Mostly due to the fact that Bank of Japan now basically owns entire economy and Japan's balanced trade policies. As you can see on this chart, as yen started to collapse this year, Japan's trade balance, normally fluctuating around a neutral value, turned to a deep deficit, pushing yen lower, causing big spike in domestic inflation. This inflation and the trade deficit concerns percolated into the bond market, and, despite all the efforts by Bank of Japan, caused a spike in yields. As this Reuters article states, Japan's inflation hits 8-year high in test of BOJ's dovish policy. There is no free lunch. At the end of the day, if you print too much currency, result will be same as it has been through ages. Currency devaluation, or a complete collapse. Since Bank of Japan cannot print oil or natural gas to mitigate import costs, raise productivity on demand, or change aging demographic with a government decree, they have to fight inflation with monetary measures. And since they can't afford higher interest rates, Bank of Japan can't follow US Federal Reserve and other central banks in hiking cost of borrowing. It's stuck with the only option, yield control. This keeps Japan from UK-style debacle, where rising interest rates almost collapsed bond market and threatened entire UK's financial system. Still, yield control, like any price cap, can only work for a short time, and I think we are seeing a beginning of unraveling of entire Japanese easy money experiment. Granted, Japan has huge reserves, so they can defend currency for a while. And this exactly what we are seeing. Couple of weeks ago, Bank of Japan spent almost $20 billion in a single day, trying to defend 145 level. As we see, it didn't last. Yen fell to 151 yen against dollar level last week and Bank of Japan was forced to act again. We will see if this intervention will be successful. As of Friday, after a massive intervention, dollar was down at 148 yen to dollar mark. The problem for Japan is that as long as there is a difference in interest rates between US and Japan, investors will be fleeing yen, pushing both yields up and yen down. And here we are coming to a very important question. Japan is not an isolated example, it is a warning of what is to come. We have seen some cracks in the financial system in UK. Based on some actions and statements from Federal Reserve, US is also getting ready for some major challenges ahead. European bond market most likely will face a major problem in a near future, despite all the attempts by ECB to balance risks in bond yields across the EU. I am not a financial advisor, nothing in any of my videos is a personalized financial advice. I am just pointing out the obvious. The legacy financial structure of the world is disintegrating and in need of some new approach. I think it is very obvious to point out accelerating trend of global de-dollarization. De-dollarization has been happening for at least a decade now and just getting harder and harder to ignore. What we didn't see in a while is a lack of cohesion in the world's finances. US Fed unilaterally raising rates, using US dollar reserve status to solve domestic problems, putting the rest of the world in the crisis mode. Japan is forced to conduct one-sided currency interventions, despite a long-standing practice in international banking to act in coordination with other countries. It appears that when faced with domestic problems, central banks are forced to act alone, and sometimes in detriment to others. And that leads me to a conclusion, that eventually, world governments and central banks will have to come together and work out a new arrangement. They will be forced to abandon an existing system and replace it with something new. Let me know if you see what I see. Do you think we are about to witness some drastic measures to salvage existing system or a complete redesign? Let me know in the comments. Call it Great Reset and whatever you wish. But the system, the way it exists now, in my opinion, will collapse under its own weight. I do not see our central banks sitting idly and watching world finance implode. We are seeing a movement towards CBDC or central bank digital currencies worldwide. We are seeing a movement towards coordination in taxation, population control, worldwide coordinated efforts in censorship and disinformation and so forth. What form this new system will take? It might be just a temporary band-aid, like a Plaza Accord of 1985, when major economies decided to coordinate efforts in devaluing the US dollar, since abandoning dollar as reserve currency is a costly proposition. I might produce a separate video on this topic since it is one of the very likely short-term solutions. That would be a major positive development for stocks and commodities, like oil, gold and silver. And maybe even alternative assets, like Bitcoin. It might be a more radical arrangement, where US dollar would be dethroned and reduced to one of many reserve currencies used in international trade. This is my base case scenario long term. Let me know if you agree in the comments, I am curious to hear your opinion. US dollar, as it used today, breaks world economy. You can see it in Japan, where pricing of energy in dollars puts extra pressure on economy, on top of uncertainty with supply. Or it might be a complete redesign of entire world order. We will see. Let me know your thoughts in the comments below. Subscribe and click that like button so YouTube algorithm can share this video with others. Thank you for watching, until next time.